Good morning, everybody. Well, I like the fact that the markets have come back in here, and it's, I believe, setting up for those that want to buy the dip here tonight. Yeah, charts. Absolutely, Jacob. I don't know why I get that brain damage to throw them up there. I see the charts. I'm like, yeah, everybody else wants to see them too. And so yesterday we had that wide range bottoming tail bar. So wide range bars, range expansion bars are emotional. Obviously, there was a lot of emotion with the sell-off yesterday as it started to go down in the fear, and we had high put call ratios around, excuse me, almost to 1.5. We had tick readings close to minus 2,000 at certain points. And then as it went up, we saw a tick reading. I saw a tick reading was pretty close to a plus 2,000 or so, where things topped off a bit. So they ran up, into price resistance again, look to the left, so on and so forth. And there it stalled. And now, last night I did a little video and I was like, okay, where should it pull back that it's got this big run up? Well, right here where these overlapping bars are. And that's exactly where it's stalling. And now we're getting a lower low. And this could be where it makes the turn. Yeah, so it depends on the platform you use. So in eSignal, it always tends to be a little bit higher than TradeStation. I don't know about TAS. I've never used that, but we all get to know our own platforms where, mine might be plus 1,700 and TradeStation, which has always been a little lower, might be a plus 1,500. So then they're rarely ever exact. Realtick that I used to use years ago was pretty close to eSignal, but we've always had others in the chat room that have used TradeStation, and we compared. TradeStation was always a little bit lower. So even some that use TC2000, which I think that's a little, not so sure how accurate it is, but once you get your reference points, we're all on the same page. All right, so here we are. Here's the pullback, and we see the concept of slowing momentum, the distance between the lows here getting closer together. So I think, look, if you're willing to start putting your toe in the water here for a bottoming process, whatever you're going to deploy, even on this dip here this morning, you could put 10% to work or 15%, whatever you're comfortable with. Even if it goes back down to the lows here, which I don't know that it'll do. Nobody knows. We'll look to add our internals being where they are. We just know historically with internals like this, it's going to make a turn. We don't know whether it'll be a V, whether it'll be a W, how sloppy it'll be or whatever. I just know that historically that we're going to get a turn. And yesterday morning, we reviewed that. We even talked about 4,200, maybe going down there, and pretty much the bias for yesterday played out the way it was anticipated to play out, coming down there, poking down toward that low area. Internals are pushed to an extreme. So there still may be intraday dips like we're having right here, pre-market, which I think is a good thing. Yesterday was good for put call ratios that were really far away. And a lot of that premium evaporated later in the day. So, bottom line is let's look for this to stabilize for a day or two. We got the Fed thing on Wednesday, so there'll be that apprehension about that. What are they going to do? God forbid, can you imagine if they raise 50 basis points? Well, that is a good reason not to go all in, because if they do, the market's probably blast to the downside. And that, I believe, will be a buying opportunity as well. So keep some powder dry, so to speak, to put more money to work. We really don't know what's going to happen. So putting a toe in the water, seeing how things shape up. The news on Wednesday, we'll deal with it. NASDAQ here, already down there, tagging about the 20% correction level. some serious damage done. Let's look at from the point of view of the Qs versus the futures there. And I think ultimately, even though we want this bounce here to shape up over the coming days, ultimately, just because it's the process, I think that it pops up a little bit, it rolls back over, and then the same concept is that we apply to even a 5-minute chart applies to a weekly chart. It's no different in that if it comes here and it pops up here a little bit and then eventually rolls over and comes down into this area, we look at this as momentum, and then we get a turn and the momentum is slowing. And that could be where we really get a larger move. At what point could be, 2-3 months from now, I really don't know, but just looking at what's to the left here, I think that's a pretty probable point that eventually gets tested. And what I mentioned yesterday, as far as timing, the timing of that would be, at the internals back here, Microsoft earnings may help or hurt. I guess we're going to find out, Deb. It's hard to imagine that their earnings are going to be bad, right? Because it's been going up. And so now they could disappoint, but it just could be a sign of a bearish market environment that, hey, the earnings come out and they're actually great, and the stock goes up a little bit and immediately fails. So, all of these things would give us insights as to this market turn. Maybe it helps it go up, but what I wanted to point out is that this internal gauge that historically is at an extreme, and intraday, it was down here, somewhere down here, at the end of the day. So what we'll be looking at in the coming days and probably into next week is that this bounce occurring, usually when it gets around the 0 line here, that's where we'll get the next sell setup. And then what happens is that when it comes down here and makes the lower low, this breadth internal will make a higher low. And that will be the point where to go all in, that'll be the pattern, but that's off into, weeks from now, whatever it might be. But this is what we'll be looking for and covering in the coming weeks. For today, I think, it might just be a go nowhere kind of, consolidation day, the inside day that's shaping up right now. And that'll be okay. And historically, that's what we typically see. Right? As prices run up, into areas of resistance. I just went over here, just in different ways. You look to the left and it's in an area of resistance. It's a power move up. That's good. And so now some jiggling around for a couple of days where it creates support. That's the idea. Right? Just like this went down and created a void, and there was little to stop it from going up, right? It was here, and you see the reactions to it, but overall was bullish, and it ultimately reached its destination, and now it's building a support area. So inside day, it's down here. Again, I look at patterns, and this is too early in the day to hang your hat on anything, but just to share what I would look for if it looked like this at the end of the day. Down, another bottoming tail bar, and that kind of a pattern, 2 bottoming tail bars with a red bar in between, you get more aggressive. I don't say get more aggressive, looking for a move up. Dow, big bar, inside day, same thing, look to the left, building support, the 5-minute, maybe a little downside shakeout here where it's stabilizing. Still questionable as far as any kind of a meaningful move. I don't think there's going to be any kind of a meaningful move. Dan will answer that, John, about a stop on a SPY put spread. I don't know how deep it was, but if it's down below this low, I would just hold on to it. Bitcoin, ultimately, maybe another blip, and It's almost there to that 30,000 level. And it just, this recovered like everything else did yesterday. So rallied up there, didn't get to resistance, didn't get as far, but consolidating here. Crude oil, kind of just inching its way down. We talked about this a couple of weeks ago. Expect this thing to stall and begin to pull in. Why? Greater than 100% retracement. And this is, look, so many that are in this industry, they call this a breakout. I want to say, well, isn't it a breakout, Greg? Didn't it break out above resistance? Yeah, it did. But it ran a freaking marathon to get there. It's tired. It went through the finish line and got a little further, and it fell on its face with the bottoming tail bar. So while it's strong, it's normal. So we don't enter after greater than 100% retracements. When prices break down and then we get a greater than 100% retracement, we look for longs. And so just because I have something on the 5-minute chart to show you, if this was going down and it broke through the low, as an intraday trader, I'd be looking for something like this on the 15 or like that on the 5 where it starts to bottom out, looking to, put the toe in the water. Whereas here, the bottom side's a lot easier to trade, picking off the bottom than the top. So I'm not so anxious to shorting things that are showing that kind of strength. But as an intraday trader, when you see this kind of a pattern, that thought of, hey, can I find intraday shorting opportunities because of that on the weekly chart? Yeah, and go to the daily chart and you start looking for signs of deterioration. And then eventually what happens is, I got that on a 30-minute, but, let's look at USO without the gaps. You start looking for rounding tops on the hourly time frame. See this, how the momentum slowed and then broke major support in this lower high. So those are the kind of patterns, and it doesn't matter whether it's crude oil, or it could be Apple Computer, it could be General Motors. All the concepts that we talk about are universal to everything: stocks, futures, Forex, any currencies. It doesn't matter. It's all the same thing. And gold, I think, looks great. I think, right? How many times did it, whipsaw us? But I just like the way it's going sideways here with the top of the wide range bar. It does have a void that it could go up. So I just like that pattern. I like the fact that it dips down into the wide range bar and it comes back up again. Those are good signs. Now, this thing needs to get going, I think, by tomorrow. Maybe again, it needs Fed motivation. I don't know. It's just that how many days can it go sideways at the top of a wide range bar? And I think today is about its day, that it better be the last day or longs start to get uneasy. All right, silver, which led the way. All right, that's pulling in. Gold's holding up now, showing some relative strength. Buyers should show up here. We're from this breakout area. Look at the ES, E-mini. We looked at that already. Right. So whether it's here's the ES. I talked about the fact that it's an inside day. All these markets are inside days right now. They're pulling back to where, last night we spoke about, and I spoke about this in a video. I showed the move up and that it should pull back into this area where these overlapping opens and closes are located. And that's what's happening. So today could be the frog in the blender day, where you just get choppy price action while the markets consolidate yesterday's big move. GDX, McGraw, has been more erratic, but still bottoming. It's showing relative weakness to gold. And look at the wide range bar, and it gave it all back, and it's coming back up again. I think ultimately it does go up if gold goes up. So, but it should, again, if gold kicks in, the gold's minor stocks should start going up. And then, of course, if you want the ETF, that's fine, but you could go and look at, other gold stocks like this. I'd rather trade this. It's above the moving averages. It's showing relative strength. It got the ability to go higher. So I'd rather trade Newmont than GDX. GDX might be better for a put spread. I mean, there's juice there. We'll be on time tomorrow. You'll be on time tomorrow. All right. We can, by the way, Kim, we keep track of who's here on time and who's not. So just don't get worried, but it does go on your permanent record. All right. All right. So as far as gaps go, spiders are down here at 433-ish. We're, 433, gapping down here. 433, gapping into the green bar. It's just really not a big deal. It's not a big deal. And I'd rather that than it shoots straight up again. I don't like this. When it does that, it's just more difficult to get. I guess it's just a comfort level personally, as far as, a 1 bar turn. My favorite things are 2 and 3 bar turns versus a 1 bar turn. That's just my thing there. So a lot of damage done. It's not over yet. VIX may, it came up there above that high, got close to, I think it's that 40 level. Yeah, up here. So now we got our internals there. VIX is close enough, and we'll see how today shapes up, and things consolidating a bit, and eventually the market's pushing up. Fed news out of the way, whatever that's going to do, and we'll talk about it tomorrow. All yours, Dan.
Good morning. Yeah, I agree. I was not wanting to go straight up. That would have made it a lot harder to get on board. So now, this pullback, we need to see what it's going to do here. So we're going to chill at the open. Greg loves these downside shakeouts, as I do too. So ideally, this is pre-market spiders right on minor support. So it's perfect, right back. And on the 5-minute chart, when we were in the green room, there was a bear sandwich continuation that we were talking about. So it's coming right back there. So, kind of ideally, the market will open and it'll make one blip down and snap right back, and then go over a pivot or whatever. Yeah, no, I know, Greg. But I was telling Greg when he said he posted, Greg, you kept saying I posted a video last night, and I'm saying it's an image. I don't see a video. So that's the point I'm making.
You didn't, so you clicked on it and the video didn't play? Is that what you're saying?
Right. It was an image.
Huh.
Right.
No, wait a minute.
Yes, there's no video. Oh, it did play for you? Oh, okay. Well, all right, then I'll go look at it again later. All right, thanks. But yeah, that's why I was confused. I'm like, what video? What are you saying here? All right, let's continue. All right, so we are selling some out of the money naked puts and put spreads yesterday into the, into the weakness with volatility rising. Things are down. Let's go right to my gap list here, or just a couple earnings. Oil was holding up relatively well yesterday. Devon here, that's a big, click on the text, not the picture. Okay, then maybe that's why, Greg. Yeah, usually there's a big button there that says video. I did click the picture, and that's all right, but thanks, Michael. All right, so this is a big fat reversal, Devon. So that's on my interest rate list. Yesterday, we were talking about APA. I still like a lot. That actually looks great. APA, I'm gonna put that in a window.
I see what you mean, Dan. Sorry to interrupt, but if you click the picture, yeah, but if you have to click the link.
Yeah, Michael's saying the text or whatever, but
Yeah,
yeah.
the link there, yeah, up above the picture. Yeah.
But in the past, I always just click the picture, but whatever.
Eh,
Well, then maybe just say that next time for idiots like me. Click the link to watch, something like that. All right, so this one came down fluid. So I like VLO a lot. Greg mentioned HAL yesterday, which had earnings. So this one's stronger. Had a potent reversal, didn't come down as much. Look at the beautiful weekly. In fact, Greg, this was the one I was trying to get us on core long up here. I was waiting for a pullback. Look at the monthly now might be the time. Old Halliburton. All right, Valley, climactic buy setup, bullish engulfing on volume. I need to start working on a volume MT live. Just whenever volume spikes, see if you have a confirming, either igniting or ending. And this on a Climo is a volume ending move. So that's a nice gap reversal. It's up. Wow, it's up big pre-market here. So let's forget about it. So too big. PII gapping up. This could be a put spread. I think it had earnings. There was some military stock that was trying to buy this one, HARD. And I think the FTC says, no, I think I'm going to block the merger. So that's getting whacked. IBM earnings, no pattern. Look at this nasty downtrend on SDC. This was a gap on earnings, on volume. Could not bounce. When you see something like this, ugly gap and can't bounce, particularly all-time lows, price void. Look at that. That was a short under that red bar right there, under 1115. That was a short. Gapping up here today, but no interest. I don't know what the news is. Okay, so this is a deep retracement, but it's a nice reversal bar. It's a piercing pattern. Gap reversal, wide range, over 50% on support and a 200. That's a put spread idea. Hope put spread idea. We'll come back to these after we get a better bias of the whole four horsemen. This would, as I tell Debbie, this would just be, riding the elevator back up a little bit because that's in an ugly downtrend. So I would much rather have reversals either in an uptrend or, on major support. You all see the difference there, Debbie? I'd much rather place something, what I just showed you, something like this on major support or an uptrend as opposed to riding the elevator back up. I still will do them. Here's another one. Potent reversal on major support, but it has no volume. But see, these are all nice reversal patterns for short-term bounces. Charlie Romeo, it's also a nice reversal, but the problem is you don't have a good price void on this one. But it could be a put spread idea. Oliver asking about Apple day trade long. Very possible. Very possible. You just got to sit here and watch it with the cues in the broader market, see if it could take out, I don't know, 10-minute high or something. But possible. IPAR, no interest. RTX, I think had earnings or lack thereof. It's gapping down. But here again, if it can recover this bearish gap down, this is a beautiful reversal bar on support in the 50 and the 200. So we'll come back to this in 30 minutes. Michael, that's a 1, 2, 3, but it's, far from the 20, but very strong. Task, it's a Climo. Today's Tuesday. So since Friday's high is so close, and this isn't a potent reversal bar, I would wait for Thursday's high on that one, Michael. You got these two tails here. I don't know. I just don't know yet. Here's a Climo, but it came down sloppier with the topping tails. But again, look at the volume. The volume, big green bar, a major support. So we'll come back to you. GE had earnings or lack thereof, 91 bucks. That's gapping under yesterday's bar. No interest. There's a Climo riding the elevator back up. So here's a sloppy buy setup, but it's a buy setup that came from a square top as opposed to a V Victor top. Xerox earnings, deep retracement, but on support, bottoming tail. Now this is a nice day trade setup actually. Look, 15-minute chart, little breakdown failure, higher low, closing breakout, price void. It's only down 8 cents. So if it can, it's 2 cents away from the closing price. If this can get over 21 bucks, I think that could be a day trade if the four horsemen are holding. Hey, Reginald, welcome. Triple M earnings, sloppy trading range. McGraw put spread idea or even Condor. Oh, I sent in Telegram Nike I like. It's in a downtrend, but I like the gap reversal. Small gap up, 30-minute high. Let's come back to that. LNT, the military sector's been weak, but this thing is definite relative strength to the military section. That's a buy setup right there. Above all three moving averages. We'll come back to that. LKFN, potent reversal on the 50. We'll come back. This thing got creamed. This is a recent IPO. What the heck happened to this? $45 down to under $5. What on earth happened to that thing? I'm putting that in a window just to watch them. TKLF. Ventex here. This is one of the Corona stocks. It's a bearish downtrend, but nice bullish gap up, holding well pre-market. We'll come back to you. Eric, gap up 11. That's gapping up all the way to this resistance area. Low G 77.50. That's it's just riding the elevator back up. Nike, we talked about. American Express had earnings. That's a big old gap, but no pattern. We mentioned yesterday that the brokered semis here were oversold, but this gap into this bar is actually deeper than the Qs, so that's not a good sign. DDS shows it down $6, but there's no print here yet. This was McGraw put spread idea, but the spreads were ludicrous. Splunk, we were watching as a put spread, gapping, deep into the real body. These two auto parts stores, AAP and GPC from yesterday. Things are just so sloppy here. I am doing nothing until this 15-minute pre-market consolidation gets resolved. The Dow 30 AXP, obviously the strongest. Triple M up, Triple M a little bit. McGraw, here, I'll look. Let's put spread idea, maybe 15-minute high, something like that. Like just checking what the juice bar looks like. Something under 170. The 167.5's 45 by 125. But see, McGraw, here's an example, McGraw. You could go down lower to the 165s and it's 61. So somebody has a bid out there, probably a GTC bid to close, and you can pop the bid at a higher price at a lower strike. Now it just dropped to 52, but let's put spread idea. All right, Nike coming in. If the market does hold here, 30-minute, it's like if the spiders take out 30-minute high, VXX, you can short 30-minute low. Because as volatility contracts with contango, well, we're not in contango right now. And we can talk about that later. I'll pull up VIX Central. All right, Nike's coming in hard, so I got no interest in him anymore. All right, remember I was mentioning that I would love a downside shakeout. We're actually getting an upside shakeout right now, looking at pre-market data. So this is, the bulls are not stepping up, at least in the first 3 minutes. So sidelines for me. Just glancing around. Oil's holding up fine, as I'm sure it will be. And Kyle Bass? Kyle Bass. And I respect him. He's a hedge fund manager in Dallas. He was, he's a smart political guy too. He was talking about the war and everything. The Ukraine mess, and he says, I'm going on record right now to say that he thinks oil's going over $100. AXP new high. Wow. Wow, that's relative strength this morning. Wow. So the Dow actually was holding up better than the other horsemen. And I think that's, you can see here on the 15-minute charts, it's retracing less than the others. But yeah, I texted Greg when the whole Scaramucci was on CNBC. I give him an A+ for being a cheerleader. He's the most bullish cheerleader on Bitcoin I think I've ever seen. He's like, it's digital gold. It's just like, it's as good of a company as Microsoft. Buy and hold. Take a chill pill if it goes against you. All right, my gosh. He says, remember, Amazon was just an overpriced bookstore at $5, and look at it now. That's what Bitcoin's going to be. I'm like, wow, this guy is just, he's a Bitcoin cult. All right, Google. Oh, and I also watched Sam